K2 was founded in 1999 by Campbell Neal and Mark Newman. We have 20 staff. We're based in Melbourne. We run absolute return strategies across 6 funds, and we have just over $500 million in funds under management. So K2, the management company, was listed in 2007, and currently all staff are shareholders of the management company. Also, the investment team, the majority of them have substantial investments within the funds themselves, and also the remuneration is directly linked to the fund performance, but also their own performance within the fund. So we have a strong alignment of interests with our clients. So we set an investment objective of 10% absolute return net of fees per annum over the cycle. So when Campbell and Mark set this business up in 1999, they felt there was a huge opportunity to manage money on behalf of clients as they would manage their own money, and with 2 real key focuses. One was absolute returns, and the other was capital protection. So when there were compelling investment opportunities on offer, they took advantage of them, and when there were risks around stock selection, they could short sell those stocks, and when there was risk around equity markets, they could go to cash to mitigate some of those risks. So with this key investment philosophy helps us deliver to our investment objectives. So for the K2 Australian Fund, we have a multi-manager approach with 5 highly experienced portfolio managers contributing their best ideas into the fund. And while stock selection is autonomous, the stock selection process is uniform across all managers. And so effectively we look at 4 key areas within the business, and that's the operating market that the business is in. It's the earnings and the earnings outlook for that business. It's the management and the quality of management of the business. And it's importantly the valuation within the context of those 3 other drivers. So when we are confident on all those drivers, then that represents an investment opportunity for us. So we have multiple tools that we use to help us navigate all investment conditions. And that is obviously the ability to buy stocks when we think they're undervalued. And from a capital protection and downside risk point of view, we have the ability to go to cash. We are cash unconstrained, meaning we can go up to 100% cash. We can also short sell securities, and we don't gear the fund. Overarching those levers, we have a risk management tool and a proprietary portfolio construction model, which also helps mitigate the downside with a stop loss trigger process for our holdings. So combining all those tools and levers together helps us achieve our long-term investment objective. So aside from what's set out in the PDS, stock selection risk and equity market risk in general is always a risk within equity market investing. However, we have certain tools and certain levers we pull given we're an absolute return product to help navigate through those risks.